Good morning. Welcome to Stock Market Today. It's Monday, February 8th, 2021. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider. Hits your inbox every trading day before the market opens. So hope everybody had a great weekend. Let's dive right back in. It's Monday morning. Let's go. U.S. equities finished higher in Friday's trading with the S&P, the NASDAQ, and Russell 2000 all finishing at weekly closing highs. So if you're bearish, the market just told you you are wrong. Record highs happen in uptrends. If you're bearish, you're wrong. Materials, comm services, and energy were the leaders. Tech and financials underperformed. Treasuries were mixed, with the curve steepening. The dollar was weaker on the major crosses. It was interesting. The dollar was strong first 4 days of last week. So we're going to take a look at the dollar a little bit later on in the show. Gold finished up 1.2%, but was still down over 2% on the week. WTI crude, fifth consecutive gain on Friday, was higher by 8.9% on the week. So for those of you who've been reading my notes, ever since crude broke through the 40-42 level, I've been saying next stop 60. That thesis broadly playing out. So as we get to the desk this morning on a Monday, futures are up 30 basis points after that sharp rally in the equity markets last week. Asian markets were higher overnight. Japan up over 2%. China was up over 1%, had a little bit of help there from the PBOC liquidity injection. So I'm not quite sure what they're doing over there. A couple of weeks ago, they were pulling liquidity out of the system. Now they're adding liquidity back in. For those of you who do pay attention to China, just keep in mind that later this week is the start of the Chinese New Year, and they shut markets down over there. European markets are strengthening, adding on to last week's strength. Treasuries are weaker, with the 30-year above 2%. Dollars bid on the major currencies. Gold unchanged, crude up 1%. So if you've been following the Dan Russo playbook, a lot of these trends have been in place for a while. There is nothing new going on here. Speaking of nothing new, record closing highs. We've been talking, we've been bullish. We've told you the trend is up. So with those two things in mind, we expect record highs, don't we? We expect breakouts to hold to the upside. We expect pullbacks to support to hold, giving us buying opportunities like they did early last week. SPY support in the 360 to 370 range, then 340. Qs, we bumped this one up a little bit. 315 in the near term, and then 300 is important. IWM 190 to 200. Probably need to start to bump this one up too. But 190 to 200. Then in the 160 to 170 range. Big picture, nothing has changed, folks. Our bullish view hasn't changed. The trend hasn't changed. The confirming data points haven't changed. The breadth hasn't changed. The risk appetite hasn't changed. So if people are, calling tops, I don't know what they're looking at. I don't know what they're looking at. Certainly not the weight of the evidence. And the simple fact of the matter is, if you've been calling a top, you've been wrong. The trend is up until proven otherwise. That's just how this works. Let's hit our market in a minute now. What are we writing about in our note today? Chaikin Analytics clients. SPY QQQ IWM log record weekly closes. Again, we've touched on this, right? And I'm being a little dramatic here to prove a point. A lot of people get caught up in what they think should be. A lot of people get caught up in backward-looking data, right? When markets are forward-looking discounting mechanisms, right? So a little bit of effect on my part, slightly out of character for me. But the simple fact of the matter is, the weight of the evidence supports a trend to the upside. We've been pounding the table on it. And I just think it's hard to call tops, and people want to do it. Everybody wants to be the person that called the top and called the bottom. All right. And then, they run around with making bombastic claims all over the internet about how they were the person who called the top and they were the person who called the bottom, right? And why they're, why they're so great. But for me, it's just about process. It's just about process, connecting the dots and doing the work. You know what? The top will be in before I turn bearish, and the bottom will always be in before I turn bullish. My discipline is trend following. By definition, there needs to be a trend to follow, right? So the trend will already be established. Commodities traded a 52-week high, confirming our bullish view. Gold and treasuries remain under pressure. We'll take a look at that. We're watching the dollar for signs of a confirmed reversal. And that, to me, is one of the big ones we'll be watching. And as I said, futures point to a higher open here today. Let's hit the major indices from a power bar perspective. Dow tacks on 28 bips, 11 at 2. You can see it all, folks. I'm not going to pound the table here because I'm running a little bit out of time. Other than to say small caps outperformed again on the day, you can see the ratios. They are all solidly bullish. You can also see that bonds are down ticking, right? A haven asset moving lower as stocks, risk assets, move higher. Materials best sector up 1.74%, 2-to-1 bulls to bears there with an 8-to-4 power bar ratio. According to the Chaikin power bar, small cap stocks and large cap stocks are strongly bullish. Major indexes are mixed. Let's hit our stock of the day. Speaking of materials, this is one that I've highlighted in the past, and I think the consolidation here gives us an opportunity to highlight it again. It's Mosaic, the Mosaic company. Chemical company. They make fertilizer, folks, and you know how I feel about ag commodities. Bullish power gauge rating, strong trend, strong industry group above this rising long-term trend line. Just a reminder, too, as well, nothing I say on this show is investment advice. This is for educational purposes only. I am not your advisor, and I am not your fiduciary. The stuff that I highlight is for educational purposes only, right? So if I'm looking for ideas, I'm looking for ideas that follow a certain process, right? I want bullish stocks that are outperforming when they're oversold with bullish money flow, right? And ideally, I want that oversold within the context of an uptrend. So I highlight, stocks that kind of fit those parameters, right? Beyond that, please do your own due diligence. As I said, I am not your advisor. Mosaic is a stock we're highlighting today. According to the Chaikin, the sectors tracker now, a lot of green on the screen and a compelling looking board, to be quite honest. And here's what that means. All green, great. Defensive type names or sectors at the bottom, even better. Energy, top of the list. That's one of our cyclical plays. Comms, right? That's where the big growth guys live. Fins, cyclical, discretionary, Amazon and Tesla, a lot of retail in there, builders, which we'll look at in a little while, right? Tech, middle of the road. Okay. It's a good looking board, right? With your beta, your cyclicals, your large cap leaders at the top, and your defensive groups near the bottom. Reed Staples, Utes at the bottom. You love to see that if you're bullish. Our industry in focus, home builder services, XHB, past 6 months, been an outperformer by about 8%, a little over 8%, almost 9%. Power bar ratio, which measures future potential, is very strong. 14 bulls, 1 bear, number 7 of 21 subsectors. Think about that for a second, right? You have 14 bulls and 1 bear as your ratio, and you're still only number 7. Like, what does that tell you about the market when your ratio looks like this, and there are 6 industry groups that are stronger than you? CCS, Century Communities, M&I Homes, MHO, and Pulte PMH, all with very bullish ratings. All holdings of a fund that look like this. Pretty simple, up and to the right. That's an uptrend, right? By definition, it's an uptrend. It's not an opinion. It's an uptrend. An uptrend in technical analysis is defined by higher highs and higher lows, and you can see it here. Bullish fund, 14-to-1, strong trend. Bullish fund is outperforming the market, right? Relative strength against SPY is an outperformer. It's oversold with bullish money flow, right? So if this was a stock, this is something that we'd be highlighting. And again, not advice, but if I'm looking for ideas in the marketplace, and if you use ETFs for idea generation, i.e., you look for strong ETFs and then drill down on their holdings, It's hard to say that this is not a strong ETF. It is by definition. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers, gainers and losers. I do this every Monday, don't I? I say yesterday when I mean to say Friday. But you know what I mean. Yesterday's S&P 500 movers and shakers. Activision earnings, stock up 9.64%. EL earnings, stock up 7.8%. Win earnings, you get the trend here. A lot of earnings, a lot of earnings again this week too. Earnings for the most part have remained a sell the news event, although that dynamic did improve last week, so something to watch. 81% of names have beaten so far. That's pretty impressive. Willis Towers Watson WLTW, only name where I didn't see any company specific news. Loser side of the board, COG, Cabot Oil and Gas earnings, FTI, some spin out news, CBOE. CBOE, I'd be interesting to see their earnings next quarter. Because of all the option trading, especially this month in January, probably happened after their quarter close. So I'd be curious to see what their print looks like next quarter, if all that retail options activity had an impact. UNM earnings and TMUS earnings down 4%. Let's look at the charts. Let's look across asset classes, right? Everybody talks about equities. Everybody can look at equities, but what are the signals from across asset classes? And quite frankly, my cross asset work has really been a key to keeping me on the right side of the trend, and therefore our clients on the right side of the trend. Clients of Chaikin Analytics who have been paying attention to my work have been on the right side of the trend. And it's largely this intermarket work that I do, paying attention to what's going on in other asset classes and connecting the dots and saying, well, what does this mean? And where's the, so, you may not trade commodities. You may not care. Now, we've been bullish on commodities, and for good reason. I mean, look at that trend up and to the right, above the 50-day, above the 200-day, confirmed by momentum. And we do have a potential relative shift going on. I think the world is I think most investors are probably not positioned for an environment where commodities outperform equities. I spend a lot of time looking at model portfolios, and most don't have a heavy weight or a weight at all in commodities. So if commodities start outperforming in a big way, those who are there are going to be ahead of their peers. And those who aren't, quite frankly, you're going to be behind your peers. It's that simple. But even if you don't care, even if you only care about equities, right, there's a message. If you drill down on the commodity complex and see which ones are doing well, and you would have found ag commodities months ago, and then you would have said to yourself, well, what stocks benefit from this? And you would have found the fertilizer stocks like Mosaic months ago when we did. So it's interesting. Havens under pressure. Again, I'm bullish on equities, but that doesn't mean I just look at equities, right? I want confirming data points. And the simple fact of the matter is gold, GLD in the top, and IEF, proxy for the 10-year bond, not yield, right? Yield moves inversely to price. Bond math. Havens are under pressure. So if I thought there was a major top in, I would expect to see these two moving higher as they were early last year. But that's not the case. It's not the case. The havens remain under pressure. All right. And risk assets move higher. And then finally, there's the dollar, which, okay, the dollar was interesting because it comes into the year in a severe downtrend. And largely, the bearish view on the dollar is consensus. Let's be perfectly clear. It's a consensus call. And there are some people out there who have been table pounding bulls. And my issue is they've been table pounding bulls this entire way down. So it's kind of hard for me to take you seriously if you're a table pounding bull in the face of evidence that has told you for nearly a year that you are absolutely 100% wrong. But we learn, we move on. What I'm watching here is the fact that this has been down as risk assets have been up, this inverse correlation. So if we're getting any kind of bid to the dollar, I'm going to want to pay attention to that very, very closely. But so far, this looks like a counter trend rally within the context of a downtrend, well below the 200-day moving average. Remember, don't be dogmatic. People have been dogmatic, right? They've stayed bullish this entire way on the dollar. That's crazy to me. Take us for a test drive. I'll be back tomorrow.